Today I want to talk about this topic called trading time frame. Okay, trading time frame and why is it important to have a trading time frame? Okay, let's write down trading time frame. Okay, so when I first started trading, right, I really have no trading time frame. Okay, that time when I trade a long time ago, right, when I trade, I will think something like, when I make money, then I sell. You know, when I don't make money, then I hold. That is not trading time frame. Okay, so trading at the end of the day, you must have what we call a trading time frame. Okay, so before I go even on trading time frame, why is trading time frame important? Because when you're trading, you are basically having a guess, okay, a calculated guess. Okay, when you enter over here, you have a target price, okay, and you have a stop loss price, or what we call the exit price if you're wrong. And this has a probability, a percentage probability, okay, and either the stock can go up, hit your target price, or go down, hit your stop loss price. There is a probability, yes or no? But besides this, right, you must have what we call a time frame within how long it must do one of the two things. If not, then what to do next? Okay, that is what we call trading time frame. Okay, so what are the different types of trading time frame? Okay, so today we will not just talk about just our SMT community, but in general, what is the trading time frame? Even for investing, there should be a time frame too. Okay, so first one is what we call intraday trading. Okay, so intraday trading, a lot of people very interested, or calling on to intraday trading in and out for the day, and then at the end of the day, I don't have any position, I just trade for the day. That's what we call intraday trading. Okay, you trade 10 times, 20 times, 50 times a day. At the end of the day, you close up all your position, zero holdings. And it's what we call intraday trading. Okay. That's first one. Okay, later we talk about the advice and things like that. Second one, after intraday trading, we will call swing trade. So in general, swing trade is about 3 to 5 days, can be maybe 1 to 5 days. Okay, 1 to 5 days. So you enter and then exit between 1 to 5 days. Not necessarily must be on Monday, exit on Friday, can be on Wednesday, exit next Wednesday, things like that. But it's basically a swing trade. Okay, let's say, example, you look at the chart, you want to do a swing. Okay, you want to do a swing. So if the price is over here, you want to do a swing, target price over here within a few days, that is what we call a swing trade. Okay, then after swing trade, right, in general, after swing trade is what we call position trade. Position trade, different from swing trade, is position trade is not so short term. Okay, it holds a bit longer term. Okay, and it holds a position. Usually the trade can last from maybe a month to maybe 3 months or so. Okay, so that is what we call position trading. Okay, you are holding longer term, and you allow that fluctuation. Okay, position trade, because in our SMT community we talk about swing weekly. Okay, swing weekly in this big time frame is called position trading also, because you are basically holding a month or two. Okay, so I will group it under position trading. Okay, then after position trading will be things like your investing, longer term investing already. Anything more than 1 year will be called like investing, okay, trading, investing. Okay, so what are the insight, okay, into all this? Okay, so number one, intraday trading. Okay, intraday trading. By the way, all these are my opinion, right? My view, right? Not make it the right or wrong view, right? In my opinion, if you are not a full-time trader, forget about intraday trading. Okay, if you are not a full-time trader, no need to think about intraday trading. Okay, why? Because there are banks, they are full-time professional, and you're a part-time trader trying to fight against all these full-time trader, your chance of making it very little. Okay, so unless you really have a very strong technique. If not, forget about intraday trading. If not, you are not a full-time trader. Okay. Next, swing trading. Swing trading is something that you can do if you want to trade for income. Trade for income. This is something that you can do. Maybe you risk $500. You want to make another $700 within a week. These are things that you can do for swing trading. Okay. Position trading. If you do not have time every day, at least 30 minutes to look at the market, then you go into position trading. By the way, swing trade, you still need to look at the market every day. Not staring at the screen, but every day you need to at least have 30 minutes to look at the market, what's happening and things like that, and set your target price, stop loss price and things like that, adjust your target price and things like that. So that will be swing trade. Position trading is for people that maybe do not have so much time, but want to write a longer position. Okay, so over here, you can even bring in your fundamentals, like you like this company because you're holding longer term, you're not getting in and out within 5 days. You want to do some fundamentals, you want to do some position trading. Generally, position trading, there are few insights. Okay, number one, 1 to 3 months. Generally, what you want to do is to buy the strong stocks. Buy the strong stocks. What is in favor right now? Okay, well, in our SMT course, we actually talk about what we call ranking. Okay, relative strength ranking, to see what is strong stocks compared to the market. Okay, you look at historical charts and then you compare the results of the 1 month, 3 months historical performance over the general market, and then you find the strong stocks. What's in favor right now? So that is what we call position trading. Okay, and that's for selecting the stocks, but the time frame is 1 to 3 months. Investing, if you are anything that longer than 1 year, 2 years, 3 years, then my suggestion is, number one, you must look at fundamentals. It's important to know the company. Number two, even investing, I will split into two types. Okay, two types. One type of investing, right, is more of long-term trend. Long-term trend. What is the long-term trend right now? You will understand the big picture what's the long-term trend and invest good companies for the long-term trend. The other way of looking at it is look for undervaluation, things that are out of favor. Okay, things that people don't like right now. Okay, usually when you're looking at undervalued things, you need to go beyond 1 year, maybe 2 years, 3 years or more. Okay, so there's a distinction between investing also. Investing in the long-term trend, like example AI and things like that, long-term trend, or investing in undervalued stocks. Okay, there is a distinct difference. Why? Long-term trend, generally when you're investing in long-term trend, maybe 1 year or so, the stock may already went up already, but you are still buying the stock. So it's buying on the uptrend. Okay, in terms of undervalued stocks, chances are when the stock is not in favor, nobody is looking at it, the stock is not on the uptrend. So there is distinct difference over here. Generally, this is slightly shorter term, maybe within 1 year or 2 years. This is longer term, maybe 2 years or more. Okay, so this will be the distinction between investing too. Okay, I hope today have some insight into trading time frame. Next thing is our SMT course. Okay, in our SMT course, what do we cover? Okay, we don't cover intraday because most of the time, people who do intraday, they're not full time, don't have age. Okay, so what we do swing trade. Okay, we do 1 days to 5 days trade. That's for trading for income. Okay, we do position trade. Position trade, we have two types. One is what we call swing weekly. This is a weekly swing that is about 1 month trade. Then we have what we call position daily. That is about 3 months or so, 3 months to about 9 months trade. And then we have longer term investing. Longer term investing, we have what we call position weekly. Position weekly, longer term, about 1 year or so. And then we have one which is looking for undervalued shares. Okay, that is when we look at the sentiment and things like that, we look at undervalued shares. Okay, so there's undervalued shares over here. So we talk about maybe from here all the way to here, but not this one. Okay, so in terms of intraday, there are other things that we need to look at besides just what we cover in the course. Okay, so yeah, so that is what we call using charts to look at it. Maybe I just show you, okay, I just show you how it looks like, so that you have more insight. Okay, at least I have a picture of how it looks like. Okay. Okay, so how it looks like is like this. Okay, let's say example, I will just use the index as example, easier to show. Okay, so let's say example, I look at Nasdaq. Okay, Nasdaq is that index. Okay, so when I talk about shortest time frame, what we call swing trade, we will call swing daily over here. Swing daily over here, we will go to the swing and daily setup. And then basically what we do is we do a swing. Example, this is a trade setup, this is a trade setup, this is a trade setup, and this is a trade setup. In the class, we will teach you how to buy here, 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 and here. Okay, that's what we call swing daily. Swing daily. Okay, in the class we will cover. Okay, next one is what we call swing weekly. So same thing, swing daily, but instead of daily charts, we go into weekly charts. Then we look at things that are here, how to enter here, how to enter here, and maybe recently got opportunity like enter over here. That is called swing weekly, 1 month trade. Okay. Then next one we have what we call position daily, 3 to 9 months trade. Position daily is more interesting because we have arrows to show you when to buy and sell. So these are example of entries. Okay, so you have entries over here, entries over here, entries over here, and then we have exit over here, entries again over here, exit over here. So generally the trades is about 3 months. Okay, so about 3 months or so. You enter here, about 4 months, you exit. Here you enter, about 2.5 months, you exit. Okay, so this is what we call position daily. And the last one is position weekly, which is long term. Position weekly is long term. Then we look at position weekly. Again, simple, you just enter 1 time over here, and then till now you still have not exited. Okay, so that is position weekly. Okay, undervalued shares is another method when we look at sentiments and things like that. Okay, whether it's undervalue or overvalue based on the trend lines. Okay, so this is some of the things we covered for in our SMT class. Okay, I hope it's takeaway. Takeaway is important. The takeaway is you need to know your time frame. Okay, need to know the time frame before you enter any trade. Okay, if not, thank you very much, guys. See you in a future video. Bye. Hope you liked the video. If you're interested in finding out more about using the systematic trading system, which I and 5,000 students use to create generational wealth from trading, click on the first link below to join our live web class to learn more.